What's up everyone, it's Kadi with MoneyVest. So in today's video, I wanted to discuss all cybersecurity stocks. I did a very similar video on stocks, semiconductor and chip stocks, which you guys seem to love. And in today's video, we're going to break down the 4 or 5 different cybersecurity companies. I've done very similar videos in the past, but it's time to update our analysis on these companies. So we're going to break down Palo Alto Networks, Zscaler, CrowdStrike, Fortinet, and OKTA. I've done a couple of videos on separate companies, of course, individually in the past. So do check them out if you want a full detailed analysis. We'll try to break this down in as quickly as possible. Full fundamental and of course technical analysis included in this video as well. So hope you all enjoy this video and find it helpful. All I'm asking in return is that you drop a like and of course subscribe to the channel if you're just joining us for the first time. The links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to members only private videos, including all the Discord alerts, trade ideas. Everything is going to be included with the link down below, as well as our moneyvest.com website that's going to be launching here fairly soon, and you will be able to access that also with the link down below. So starting with, also do connect with me on Instagram. I forgot, my handle is going to be CastWRP, and I do post a lot of interesting stories and updates and all that stuff over there as well. So this is going to be the comparison that we're doing for CrowdStrike, Palo Alto, Fortinet, Zscaler, and OKTA. The interesting thing is that they are now, almost all of them are now profitable, except I believe for OKTA, which is still struggling with some profitability. So if we basically come over here and take a look at the earnings per share growth, so EPS growth, net income, basically we don't have any, but if you come over to EPS growth diluted on a year-over-year basis forward, so you'll notice that CrowdStrike has 47%, Palo Alto has 34, almost 35%. Fortinet's probably the lowest at almost under 18%, and Zscaler is over 66%. But of course, we don't have one on OKTA, which is not meaningful because it is not profitable yet. And again, you can kind of see that over here also with net income margins, with CrowdStrike generating just under 3%, because this has recently turned the corner towards profitability. And kind of, I did the math earlier in my other video, and they're going to be expected to do somewhere around 20 to 25% margin over the long term on a non-GAAP basis, by the way. And then this right here, 30% profitability for Palo Alto, 21% for Fortinet. Zscaler, I think in the last couple of quarters, they have turned the corner towards profitability as well. So that is not for the entire year. They're not profitable, and OKTA still struggling. I did a video on them recently, so definitely do check that out as well. Gross profit wise, they're almost all kind of on par with each other. They're all generating well over 74, 75%. So CrowdStrike 75, Palo Alto 74, Fortinet 76, Zscaler 77, OKTA 74. So they're all kind of in the same range. When it comes to free cash flows, they're also all at the same sort of level. CrowdStrike and OKTA kind of take the upper hand here because they're doing 32.8 and 33% respectively. Fortinet's the lowest at 27% because it's a more profitable company at the same time, and Palo Alto is just under 30%, and Zscaler also kind of up there with OKTA and CrowdStrike at over 32%. But I would say they're all almost identical to each other, so they're all doing really well in terms of gross profit and net income and levered free cash flow, except for OKTA, who is not profitable at the moment on the bottom line. Now, when it comes to valuation, so where are they trading? So Fortinet obviously trades at the best valuation on a forward GAAP and non-GAAP basis. If you take a look at the 1 year, I mean, we're looking at 41 times earnings. If you take a look at price to earnings on a forward basis, on a GAAP basis, 50. Palo Alto is 42, so that's actually quite reasonable, much better than Fortinet. And not to mention, of course, CrowdStrike almost at 400, but on a non-GAAP basis, it's actually quite more reasonable. I just calculated that earlier. It's closer to 80 times earnings on a non-GAAP forward basis because they are expecting almost $4 in earnings per share. So 80 times earnings is still quite reasonable. Palo Alto is 50. CrowdStrike, again, the growth rate is there. The growth rate, you're paying for the growth, basically. That's what the premium comes for. Fortinet, I don't believe they're going to be seeing 41% growth here, so the PEG ratio is certainly much higher. So it's 2.77. So on a growth adjusted basis, Fortinet actually makes for a less attractive proposition than compared to, let's say, CrowdStrike, for example, who is at 1.92, because the growth is really strong on a forward basis, and that's exactly what you're paying for when you're paying a premium of over 84 times earnings multiple. Zscaler and OKTA don't necessarily have right now the profitability to kind of calculate the forward non-GAAP earnings expectations or the PEG ratios. So for that reason, we don't have that. But of course, 1.72 and 1.82 is what we're working with. But I would take that with a grain of salt because we don't really have a lot of the numbers for those two companies just yet. Price to cash flow. Fortinet much better at 28 and Palo Alto at 29. CrowdStrike at 67 and we got Zscaler 46 and OKTA at 35. Also, so they're all quite reasonable. CrowdStrike again trades at a little bit of a premium considering the growth is the highest for this company. That's what you're paying for. When you're investing in CrowdStrike is the future growth potential for this company. So 47% is going to be the diluted forward growth rate. Zscaler is also going to be up there because it's also going to be turning the corner towards profitability. And especially when companies are becoming profitable or in the process of becoming profitable, they tend to actually provide with the highest growth rates and also are trading at the highest multiples. So from just a fundamental analysis alone, what I would kind of dissect this down to is if you're looking for high growth cybersecurity, Zscaler and CrowdStrike kind of stand out a little bit more. Palo Alto is, I would say, a little bit more established than CrowdStrike and Zscaler, and for that reason, the growth rate is starting to kind of taper off. However, the valuation is a little bit more reasonable compared to Crowd and Zscaler. So if you're looking for high growth cybersecurity, CrowdStrike, Zscaler, kind of stand out, even OKTA, but it needs time to turn the corner towards profitability. If you're looking for more stability at a decent valuation, Fortinet kind of stands out, obviously, because of not only the valuation, which is a little bit more reasonable, not on a PEG ratio though, considering the growth expectations and where it's trading at the moment based on a P multiple, one could argue that PEG ratio is a little bit higher. But again, it's a little bit more stable company with good free cash flows and good profits on the bottom line. Now, if you come down to the balance sheet, now balance sheet wise, we do have negative net debt for all companies, which is fantastic because they all are, good companies with good balance sheets, meaning more cash than debt on the balance sheet. So CrowdStrike the most at negative $2.6 billion. So Palo Alto negative 1.1 billion, Fortinet negative 1.3, Zscaler negative 1.2 billion, and OKTA almost at negative $1 billion. So all the companies have more cash than debt on the balance sheet. That's fantastic. Debt to free cash flow is the lowest for OKTA, followed by CrowdStrike. We look for this number under 3, so we want to be able to pay down all the debt using the free cash flow in under 3 years. So that is quite reasonable at 4. I'm going to let that slide because the companies do have more cash than debt on the balance sheet, so we can kind of overlook this metric a little bit, but Fortinet's 5.37 and Palo Alto is a little bit over 6. So, but then again, like I said, all of them actually do have more cash than debt on the balance sheet, so that's already pretty solid. Free cash flow wise, Palo Alto generates the most at over 2.2 billion, followed by Fortinet 1.4 billion. So again, like I said, these two are a little bit more sort of established companies. CrowdStrike and Zscaler are kind of coming up there, and OKTA also is, of course, one of the smaller companies among the list here. So like I said, if you are looking for high growth here, CrowdStrike and Zscaler kind of stand apart in terms of high growth because their earnings expectations are really high, especially for CrowdStrike. They're going to be 3xing the revenue in the next 6 years, as well as the profits. And Zscaler, also in that very similar boat, but of course it's been selling off a little bit, down over 24% in the last couple of weeks here, and the next support really is going to be down here at closer to 161 for Zscaler. Another potential support is going to be here at 191, closer to $200 per share. And again, resistance all the way up to as much as 255 for Zscaler. So this right here is going to be that resistance to also keep in mind for Zscaler. So all resistance, actual resistance, support level is going to stay put at 191 down to 161 for Zscaler. And again, CrowdStrike, I already did a video on them earlier today, so definitely do check that out. Support level is going to stay put down to 290 as low as $244 per share. And Fortinet has recovered really well. We had a fair value in the low 40s. It's done really well, up over 63% from those levels. And of course, resistance is going to stay put right over here at $73 per share. That's exactly where we got rejected back in 2021, even in 2022 before selling off further, then rallied back higher, then sold off once again. And this right here has been a very nice recovery back up, and resistance is going to stay put at $72 per share. And then finally, we got OKTA, which has seen a very nice rally up over 2.2%. I did a video on OKTA recently, so definitely do check that out if you find the time. But this right here is a breakout that we're actually seeing almost at $111, $112. So if you do get a further breakout here to the upside, next target and resistance at close to $142 per share. For OKTA, with the support levels, that's going to stay put at roughly around $90, $91 per share for the company. So my personal favorite at the moment is going to be CIBR, the Cybersecurity ETF. That includes actually all these ETFs in them. So that is the one that I'm actually keeping a track of because it does include OKTA and Palo Alto and Zscaler and Crowd. And this right here is going to be a good, decent support at $53, $54, all the way down to inside this green rectangle in the $48, $49 per share, all the way down to as low as $37. So lower the better. We're always hunting for good deals. We're always looking for good prices. And that's exactly why we are here investing in the market. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel. Do connect with me on Instagram if you're interested in connecting with me there. And again, bottom line is high growth. I would prefer CrowdStrike and Zscaler, but at better prices. Palo Alto would be somewhat of another growth cybersecurity company. Fortinet would be a little bit more stable, and OKTA would still need some time to actually turn the corner towards profitability. So as always, happy investing, and I'll see you all in the next video.